Welcome to the Transparent FX Academy. My name is Nick and I'm a top podder on TRADINGView. And as a top podder, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-time frame technical analysis and order flow. Now let's not waste any more time. Let's go straight in the charts to find some good trading opportunities. It is definitely time for an update on the situation that currently we are having on CHF JPY. In fact, that is exactly the pair that I will be speaking about in this video, and I will show you what kind of opportunity we can be looking for on the pair. But as usual, I will keep the analysis as educational as possible so that you will learn exactly what you have to be looking for when you're actually analyzing the market and scanning for opportunities. Now, as usual, this structure of the analysis will be both from a technical and order flow perspective. So first, I will be breaking down the market on all time frames from a technical perspective. We will then go and see what we have from an order flow perspective. And by the end of the video, you will know exactly what kind of opportunity we can currently be looking for on CHF JPY. So let's start the analysis from the monthly time frame. Now on the monthly, what do we currently have? We have a market that has just provided a very nice impulse to the upside. Now after an impulse and a retracement, what do you expect? You expect the market to show a continuation to the upside, specifically if the retracement is exactly to the previous resistance, which is now turned support. In fact, if we look at the structure of the market, we can see that on the monthly, the market created an impulse, started the correction from here, and then broke above this area of previous resistance, which is now turned support, which is exactly the area that currently the market is testing. And after a market breaks above a previous resistance, which is now turned support, what you expect is the continuation to the upside and a rejection of this previous resistance, now support, and the continuation to the upside for the creation of a higher high. Now, in general, if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do this, if we take our Fibonacci from the low to the high, we can see that the market has already retraced exactly to the 50% of the Fibonacci taken on the impulse, which is in perfect confluence with the structure resistance that is now structure support that we have here from a monthly perspective. So on the monthly, everything is clear. We would like to see the market create a continuation to the upside from this area. Going down on the weekly, what do we see? Now from a weekly perspective, situation is quite clear as well. We had a market that had created this M formation, and after an M formation, what do you want to see? In general, after an M formation, what you want to see is the market to go and complete the pattern at the neckline, aka the previous support, which at that point is turned resistance. And in fact, that is exactly what the market did. The market went and completed the pattern at the previous support, which is now turned resistance exactly as you expect from the pattern itself. And after completing the pattern at the previous support and resistance, the market started a nice rejection to the downside. And in creating this rejection, the market is also creating another M formation on the weekly. We have an impulse correction, the market tried going higher and now is breaking lower. So we have another bullish pattern. So at the moment, monthly and weekly are both bullish. Let's go down on the daily and see what we have from a daily perspective. Now on the daily time frame, situation is quite clear. We have a market that had created this huge move to the downside. And after this very strong impulse to the downside, I made a full breakdown of CHF JPY when the market was here, explaining all the reasons for which from here we wanted to see the market create this move to the upside. And in fact, that is exactly what the market did. Then again, I spoke about CHF JPY after the market had created this W formation, and I explained all the reasons for which from here we wanted to see the market complete this W formation at the neckline. And again, that is exactly what the market did. And by the way, I will link in description these two previous analyses so you can go and check them out for further reference and more free education. You find everything linked in description. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. But at the moment, what we can see now, at the moment we can see that the market is creating an overextended formation to the downside, breaking below this structure. So we have a bullish pattern also on the daily, because on the monthly we have already seen that everything is bullish. On the weekly we have seen that everything is bullish, and now on the daily we can see that also on the daily we have a bullish pattern, which is an overextended M formation. Now in general, when you have an overextended M formation, what you expect is the market to go and complete the pattern inside of the zone that is in between the previous support and the neckline, and this is basically the completion area of the pattern. So the zone that goes from the area at which the pattern started and the neckline. This is the area in which you expect the market to go and complete the pattern. Now in this case, the zone that we're speaking about is all the area that is inside of this zone here. So what we do expect is the market to go and complete the pattern inside of here. And how we will be approaching this opportunity, now that we know that the monthly, weekly, and daily are bullish, so we should see the market create a nice move to the upside. How we will be approaching this kind of situation with students. Now, before I show you that, let's first go and give a quick check at what we have from a COT perspective. So commitment of traders, which is what hedge funds are currently doing in the market. And obviously, if you're able to position yourselves together with hedge funds, you can get an advantage over your competition in the market. Now, what we have on the CHF is clear longing. In fact, what we can see with the last report is that hedge funds have added 4.7k long positions, so net positions increased from 12k to 14k. So definitely we can expect some CHF strength and for the market to complete the M formation to the upside. If we go and see what we have from a JPY perspective, we can see that with the last report, hedge funds have opened 5k short positions and closed 700 longs. So we have massive shorting with longs getting closed. Currently we are sitting with 46k longs and 32k shorts. Net positions have clearly decreased from 29k to 14k. So we can definitely expect some weakness, which should lead to the completion of this M formation at the neckline. So from a COT perspective, we do have our confirmations. Now, how we will be approaching this situation? As usual, monthly, weekly, and daily combined with the COT data are the best time frames when it comes to the direction of the market. But obviously, trading is reactive. Trading is not predictive. So even if the direction is clearly bullish, you cannot just be longing the market. You have to wait for proper confirmations. And which is the best time frame to look for confirmations? The best time frame for confirmations is the 4-hour time frame. And at the moment on the 4 hours, what we have is a market that clearly is bearish. The market has been creating lower lows and lower highs without showing any sign of bullishness. So how we will be approaching this with students? Now, as usual, we will be monitoring price action from a 4-hour perspective inside of this move to the downside. And we will be waiting for the market during the move to the downside to shift from a bearish market as it is right now to a bullish market. And only if we will see from a 4-hour perspective the market shift from a bearish market to a bullish market, only at that point we will add CHF JPY to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and completion of the overextended M formation at the neckline. Also rejection of the monthly previous resistance, now turn support, and completion also of the weekly M formation as we have seen on all the time frames. Obviously, we have new report coming out on Friday, and if that will show also more longing for CHF and more shorting for the JPY, if we still haven't completed the pattern, that will also increase even more the probabilities of the setup. But as usual, we have to be reactive and not predictive. And at the moment, we still don't have any confirmations on the 4 hours. So it's definitely time to wait for proper confirmations. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find it linked in the description. You first learn all the rules of my rule-based strategies in the program, and then you trade them live with me. In fact, every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, take profits, as well as having me answering every single question that you have every day, including the weekends. So I really suggest you go and check it out. The link is in the description, and I will see you in.